Welcome to another infographic instant with Brian Michael. In this episode, we'll be looking at which countries have the most financial regulation. In the literature, there are many studies of financial regulation. Some of these studies look at its impacts on the banking sector and the real economy. Several others try to measure this financial regulation, but as to date, few academics or practitioners offer a compelling measurement of the level of financial regulation. With such a measure, of course, we would be able to compare countries and decide if countries with a higher quote-unquote level of financial law would in fact perform better. Before looking at the data, let's consider the theoretical aspects of the quantity of financial regulation. There are, of course, two views as to whether a country should have more or less financial regulation. The first view is the transactions cost approach, and this approach has gained a certain amount of popularity in recent years. And this is the view that increasing amounts of financial law impose costs on banks, on regulators, and on third-party economic actors. As such, a country would want to minimize the volume or the level of financial law because of the impacts that it has on distorting the supply and demand for financial services. Naturally, there is an opposite viewpoint which looks at financial law as promoting the flexibility of the financial services sector and actually enables the offering of financial services. In this view, more financial law basically serves as a codex or the enshrinement of what regulators and bankers have learned over time about offering financial services. Thus, even by studying a country's financial law, one can better understand what types of services banks should offer and what the effects of offering those services is on the financial sector and the broader macroeconomy. So now turning our attention to the infographic, we show the results of what is known as a clustering or factor analysis. And in that analysis, we simply want to gauge how similar the financial law is in different countries by putting a 1 or 0 next to whether that country has a particular provision in its financial law. We use the World Bank database of banking law covering all countries in the world for which the bank could find data for, and this represents roughly 800 different dimensions or provisions of banking legislation and regulation. So looking at these four groups, we see that those 1s and 0s that I talked about are the most similar for the United States, for China, for the Ukraine, France, and Germany as one level, and that basically represents some of the most complex financial law in the world. The second group roughly comprises the BRICS. We see Russia, Kazakhstan to a lesser extent, Canada, though of course we know that Canada is not a BRIC country, Norway, and the countries that you see in front of you, Italy. Of course, these measurements are not black and white, so when I talk about the BRICS and non-BRICS, turning our attention to Brazil, to India, to Argentina as the member of the third group, we'll see in a moment that membership ranges from 0 to 1, with these BRICS sitting somewhat in between the second and third group. And finally, the fourth group of countries are those countries such as Colombia, north part of South America, several countries in sub-Saharan Africa, which have relatively different regulation than we see for the United States and for China. Now, we've looked at the map. What are the numbers in specific? So looking at the numbers, what we have done is we've taken this measure of difference of financial law and we have simply mapped it onto a 0 to 1 scale, with Germany, the United States, and China, as you see in front of you, having the most similar type of financial law. Going down the list, we see Italy, Norway, Finland, Gibraltar, Bahrain, Lithuania, and so forth. Going to the second part of this list, just so you can see the actual numbers rather than trying to decipher it from a map, we see Thailand, Indonesia, Hong Kong falling fairly far down the list. And turning our attention to the bottom of the list, we see countries such as Poland, Israel, Malta, and at the bottom of the list, Bulgaria. So what we need to take away from this exercise is that we cannot assume that countries will have similar financial law based only on their level of GDP or other economic activity. And we also cannot assume that they will have similar financial law given their membership in an economic grouping like the European Union. We see countries such as Bulgaria, Poland, who belong to the EU, but have very different level of financial law than countries like Germany and France. This has been another Infographic Instant with Brian Michael.